Good morning and welcome to The Trading Wife. Good afternoon for those of you on the right coast. Of course, this is The Trading Wife on BTFD TV, and I want to thank BTFD for offering the venue here so that we can do these shows. I think they've been going over really well. I know I've been getting a lot of really good feedback from folks on these shows. We've been having quite a nice day today in the markets. Certainly trajectory is still up and markets are working to break out of that top line. Of course, we're going to talk about all things stocks and charting and so forth. Quickly want to let everybody know that my website is www.thetradingwife.net, and this show will be available on that site later on today. We are recording this and the video will be available on my site. Again, it's www.thetradingwife.net. You can also reach me by email at thetradingwife@gmail.com and follow me on Twitter at thetradingwife, all one word. If you're interested in joining a subscription service or interested in personal mentoring, just pop me an email and we can have a chat about that. So without further ado, let's get on to the charts. Let's take a look at the SPY here. Got a really nice look there in the SPY today. As you can see, this is definitely, we've got this nice uptrend going in here. I'm going to draw this line, in fact, because whoops, let me get that. Those horizontal lines that I often have in my charts are my levels. So I look at lines in two different ways. There are the trend lines that tend to slant, and there are the levels that are horizontal lines, and those all represent support and resistance. This is a clear up trend line here that this has been following the SPY for the last, I need to get my glasses on. I can't see this very well without them. I take them off for the camera, because I don't have anti-reflective lenses, which I need to probably work on so that I can do that without having to put them on and off all the time. But clearly we have this upward trajectory here, came down and tested this, creating this trend line in here. We have this top line in here that put in even from these first few candles back here in February and created this resistance line pushing through that currently. If we put a horizontal line at that top, that is the market top. So let me see if I can make that a little bit better there. And let's pull this out. So as you can see, that is the market top. There was a spike back here in December. I've talked about that many times before. If you go to the actual S&P, that spike's not there. So that was one thing to remember about the SPY versus the S&P. Yes, the SPY is a ETF that represents the S&P. However, it also trades. It is a derivative, so it's options based on options. And that can cause some odd spiky things that are not necessarily representative of the components in that indice. So I would say in this case that is definitely not representative, and was probably more to do with options. I need to go back and look at exactly what that day was. I keep saying that it probably had to do more with options or expirations or broke. Could have been a number of things. But as you can see, this line in here, this is a rising or ascending triangle in here, and this was in a range for quite some time. We had initially had this range here between this time and this top line back in December, January, February. Finally popped out of that, and then we got a little higher and created a new range in here. So we've been zigzagging through this range, but in an upward trajectory with a flat line on top. That's been creating our ascending triangle, which is a bullish trading pattern. And if we actually bring that down to that resistance line at the top of all those candles, you can see that's actually breaking out today. So things are looking good in this market. When we pull back on the weekly chart, you can see, of course, that we've still got this upward trajectory, and we're still in this channel. So chances are that when this pops out of this top line, which it is, that it will go to the top of this channel here. Whether that pops back up through there or zigs back down as it continuing in an upward trajectory up this channel is yet to be seen. I'd say the likelihood is that it hits this top line, makes a new high, and then starts zigging back down before it continues. But for right now, we have at least a few days, I think, ahead of us of continuing to the upside in the S&P and the SPY. Taking a look at the diamond, which is the ETF component for the Dow, we're seeing something very similar here. Yesterday's candle actually popped up through that top line, so I don't know, you could probably draw that there now, and you might say that that's not actually breaking out, but using these first higher candles, I would say it's breaking out today. Again, you have this upward trajectory here, very clear trend line. I don't know if, let me see, I don't think this is a very straight line up here for a level, but that's definitely a level of resistance, right? You can see that definitely is putting in a level of resistance there, and that's what it's bumping up against. But it looks as if it wants to break up through that. It's in an ascending triangle there, and we're just going to keep looking at that. Right now, I'd say it all looks pretty bullish in here. Same is the true for the small caps, the IWM chart in here. You can see that this top line, again, is fairly straight. Oops. Get that a little higher there. There we go. And then we have this upward trend line here, creating, again, an ascending triangle. So these are very bullish patterns. We also have some decent candlesticks in here, and we are above the ADMA. The ADMA is my trigger line or T line. Let's see, let's talk about that for a minute. Most of you who've been following me for some time know that I do use the ADMA, and I do use it as a trigger line. I call it the T line. I did not coin that phrase. I did not come up with that idea. It comes from Rick Sadler while he was a student of Stephen Bigelow's. I was also at one point studying under Stephen Bigelow quietly, and learned about the ADMA from Stephen Bigelow. He had gotten it from his student who had discovered how well it works, Rick Sadler, and I adopted it. What we've noticed, what they noticed, and what I agree with is that stocks tend to move up when above the ADMA and tend to move lower when below the ADMA. So it becomes a great trigger point. Nothing in trading is absolute. Obviously, I use a combination of indicators, moving averages, candlesticks, and technical patterns to determine when to get in or out of a position. And the point is to, of course, keep the odds in my favor, because trading is an odds game, and the most important thing is to keep the odds in my favor. So that also includes risk and reward, position sizing, trading small and often, and several other metrics. If you've been following me for some time, you probably have an idea of my strategy and my style. So I do use the ADMA as a trigger line, and it's always the red line on my charts. So let's go back and take a look at that again. So once again, we have that the red line is my ADMA or my trigger line. This dark blue line down here, that's my 50 simple moving average. The yellow is the 34 EMA, which I also picked up from Rick Sadler through one of my chat members, Goofy Golfa. The orange line is the 21 simple moving average. I know a lot of folks use the 20. The 21 is a Fibonacci number, as is the 8. So I think that it gives just that little bit more oomph there. And then the light blue line that's way down here, we are well above the 200-day moving average, is the 200-day moving average. Oh, this is a weekly chart. I thought this was the daily chart. Look at that. I went on the weekly. So let's go back to the daily. Oh, that's fun. And you can see that on the daily, this IWM is still basically doing the same thing that we saw on the weekly. Only those candles are not quite as short up, but it's still doing that ascending triangle. Let's see, was I looking at the weekly on those other charts as well? Let's take a look here. No, I think that I was pretty much, I must have changed over to the weekly. Still, that looks like it's breaking out there. I think I did. I changed over to the weekly to take a look at it. Diamonds as well. Last but not least, of course, the tech stocks, the Qs. This is also breaking out here, as you can see right there. If we put in our horizontal line at the top, I would say that that's, you get that breakout there, but looking to make a newer high in the Qs would require a high of 109.42, so not quite there yet, but certainly heading in that direction. Obviously, you can see this upward line here, that upward trajectory. Again, it's creating not quite as much of an ascending triangle because this isn't as straight of a line, but certainly some very bullish candles in here, like the way this gapped up with this sort of spinning top candle, and then it filled that gap to the ADMA and bounced right off of it yesterday, and then was putting in this beautiful bullish Marubozu candle today. So a lot of great looking, the indices are looking great, and there's also a lot of great looking stocks out there, as usually is the case when the indices are looking great. One thing I do want to bring up, and here's a really good example. Actually, I have a few candles on here that show this. On my TC2000, I have this set such that candles are green as long as they were up from the previous day, and they're red if they're down from the previous day. So some folks have their chart set. Some charts I think are automatically set, I guess. FinViz might be so, where the candle turns red if it's down from the open. That to me is more confusing when I look at the chart. I know when I see this filled in that it pulled down from the open. I know that it opened here. Let's get a little closer on this candle so you can see what I mean. When I look at this chart, oops, there we go. When I look at this chart, I can tell that this candle opened there, right around 108.72 or so. Is that correct? Let's see. Opened at 108.74, you see. Then it popped up during the day because it has that shadow or wick up there. And then I can tell that it came down and closed lower than it opened because the candle's filled in. But it's still green because it's still closed up from that candle. It's still a trader's best friend. It's still a gap up from a doji. And it still closed as a gap up from a doji. For me, if that candle were red, that would be deceiving. But some folks have that turning red on some of the charting platforms. It seems to me that that gives you less information because obviously we have the candles that are open and we have the candles that are filled in. And the candles that are open are up from where they opened, and the candles that are filled in are down from where they opened. And the green candles are up from the previous day's close, and the red candles are down from the previous day's close. So that's how I like to look at these charts. That's how I have these TC set up. I find it much more accurate. I think it's a clearer picture of what's going on. One of the charts that we were talking about specifically was this Onvo. This yesterday's candle gapped up significantly, pulled back, but held this 50-day moving average. Certainly still a bullish candle. Would not make sense for me for that candle to be red, even though it came down from the open. Today's candle is red because it's down from yesterday's close. That makes sense. Still holding that 50-day moving average. This looked like it was a pretty decent pattern in here, so I'd say that's definitely worth watching on this daily chart. Let's take a look at the weekly on here and see what that looks like, because it's made this V bottom. So see, that just looks like a V bottom on the weekly chart. So worth watching, and probably not quite ready to trade just yet. Taking a look at the positions in my portfolio, as volatility continues to collapse, XIV continues higher. And my position is now up by 14% here, which I'm pretty okay with, needless to say. These are some great looking candles. It's getting a little extended here from this ADMA and the 50, but the ADMA is crossing over that 50-day moving average today. So again, you know, more bullish stuff going on here after it broke this downtrend. It created this sort of double bottom in here and continued higher. When we look at its counter opposite VXX, we can see that that volatility just continues. Whoa, whoa, whoa. Whoa, what happened to my, oh, I hate it when it does that. This is a, okay, there we go. I don't know what you guys saw, but I don't know if you guys still had the chart there or not. When I go to the, hold on, the actual VIX index, you can see it's still continuing to collapse. It hasn't made its lows from June and July, but the way the ETFs work, the VXX and the XIV, is they also have contango and volatility associated with them because they're options based on options. They are derivatives, just like the SPY and the some of the others. The VXX, because it is a bearish ETF, suffers more from that decay in those options. We saw a bit of that when volatility was high and XIV was actually not doing as well as VXX was doing poorly. So that was really interesting because the moment that volatility started collapsing, that switched and XIV started pacing VXX to the upside, if not more so. So that's really nice. Couple of more positions in my portfolio include Apple. Come on, Apple. Apple did do. There's the weekly chart on Apple. Beauty, breaking out. I've been trading based on this weekly chart, creating this J-hook pattern in here. I think I got a decent entry at this point, even though I'm just barely up. It's still consolidating a bit from previous moves. They are releasing their iWatch tomorrow, so it will be interesting to see what happens with that. My theory on that is that, you know, Apple's a really good company, and Apple tends to pull rabbits out of its hat that roar. I always refer to the Rocky and Bullwinkle cartoon where, you know, he pulls a rabbit out of its hat and it's actually a lion or something like that. I always say that that's, you know, that's Apple. Everybody wants to be so negative on Apple so much of the time, saying they can't create more products that do well and they can't make more money and they're not going to sell more, and they just continue to do well. And the reason is that they have really good forecasters. They do a really good job with their marketing. They know what their market is. So I highly doubt that they will put out more iWatches tomorrow than there is a market for. So my prediction is that they will put out the right amount of iWatches. That's going to get sold out. That's going to bump the stock up more. Folks are going to get excited about that, and that'll create more demand as well for the iWatch. I think this is what they do, right? And then they have time to work the bugs out before they put it back out, and people can catch up and order more iWatches. They'll take pre-orders after they sell out, right? Earnings are next week. Which day are earnings? Somebody know which day earnings are? Oh, there goes Ollie. Sorry, that's my dog. He's barking at something outside, I guess. My daughter is unfortunately homesick today, which is why I was running a little late this morning. I was a little focused on her. So it happens. When you're a mom, that's the way it goes. I'm going to look up Apple's earnings. Oh, 427 aftermarket close. Thank you, Gigi. Appreciate that. So that is, oh, that's Monday. So Monday after the close are the earnings. So I will take the majority of my position off on Monday before the earnings, because that's always what I do. I say the majority because I usually take full positions off, but I really want to hold them Apple long-term. And I do hold long-term positions through earnings. So I will likely keep some on to have a core position, and I can add to it either way, whether it pulls back or goes up. I suspect they'll do well, but again, earnings is always a gamble. You never know what people's reaction is. You never know. It depends on so many things. It's not even just expectations or beating expectations. Sometimes it's just folks, the market makers and the investors have particular ideas, and they react a certain way, and it may not make sense to you or I, but it is what it is. So earnings events tend to be more of a gamble. It's what fundamental analysts use. As many of you know, my husband's a fundamental analyst, but even he has learned to shy away from earnings. In some cases, he'll sometimes buy some lottery ticket options when he's really, really feeling sure about something. I will exit the majority of my position on Monday, but I want to keep some on for a core position. Okay, chart requests. We got some chart requests going on up here. Let's keep going through my positions quickly, and then we will move on to the chart requests. So here is Tile. Golly, Tile just keeps has been whipsawing back and forth. This looks like it's going to go on my chopping block today, unless it shores up, because it has not only at this point lost the T line, but it has also lost this up trajectory line. It is sitting right on that 34 EMA, so I will give it to the end of the day to see what it does. Sometimes that can just be a head fake. It might just bounce right there. I don't like that action today. It has been doing a really good job of hanging in there and coiling, and I believed that it had a good chance of pushing up through that top line, but now it's starting to go the wrong way. So I will an eye on that later today and possibly drop that before the end of the day. Twitter is hanging in there, holding that ADMA, putting in a little red doji after a little green doji yesterday. Not a big deal. It's still in this, making a J-hook pattern here on this daily. That line that's up that top there, that's from the weekly chart. That's that weekly breakout. So it's currently holding that weekly breakout. Weekly chart still looks good. So I will likely still hold Twitter. This is a bit of a cup and handle in here that looks nice, and this little J-hook off of that. Back to the daily, looking at AEO. I've been holding this a little bit longer. This was, some of you remember, my daughter's idea, and she got in way back at 14, so she's doing really, really well. I really got in not much below this, but liking this pattern here today. We have a left-right combo yesterday. It's doji with today's bullish engulfing candle through the T line, morning star signal of sorts. The only reason, okay, let's talk about that real quick. So the reason it's a morning star signal of sorts is because a true morning star would have a gap on either side. This does not have that gap on either side, but it does have a doji bottom that clearly dipped down and put in a doji with, a higher candle the previous, coming out of a downtrend and then now moving back to an uptrend. That's clearly the bottom. So it's clearly a doji bottom. And so I call that a morning star signal of sorts because it doesn't have the gaps. The weekly chart is gorgeous. And this is really what I've been looking at on here. Also keeping this longer term, looking at a more core position here. Really like this weekly chart in here. Holy is the one I put on yesterday, and loved the Wikipedia explanation of HOLI being an Indian celebration that Raj provided for us yesterday. Got a big kick out of that. That's a lot of fun. This is fun on this weekly chart, right? Because you can kind of see this cup and handle forming in here and above all those moving averages. When we go to this daily chart, you can see this J-hook in here right off the T line. Really nice looking chart in there still today. So we'll look for that to continue. Okay, here are some requests. I see G-Pro looks great. I know a lot of folks were talking about the G-Pro. In fact, I brought it up a few days ago. Have not gotten in, although I don't think it's too late to get in here. Certainly, I would say yesterday's candle is a bullish engulfing of several spinning top doji type candles. So you see there's several days that have been engulfed there by that bullish engulfing. So that's a multi-day left-right combo. I don't know why I would say that this line would be from this top candle and yesterday's top candle, breaking out from that today. It is not too far from the T line to get in, so only about 2.5% from the T line. So that could still be entered here. I'm also seeing an RBB, or a rounded bottom breakout, also one of Rick Sadler's setups that I also learned about from Goofy Golf Club, where the 8 EMA, the red line, has popped through these other moving averages, the 50, in my case, the 21 and the 34. And with the 200-day moving average above, that is the target. That's at 56.77 from 46.39. So that's a little more than a $10 move in a 46 stock. That's more than 20%, with a risk of only 2.5%. That's some pretty decent risk reward. Certainly, this could be bought for a nice move to the upside. No guarantees, of course. You never know exactly which way they're going to go. It's all about odds, but the probability of this, looking at this chart and these candlesticks here, I would say is that you could buy this long and target the 200-day moving average. BMRN also requested from Lance. Hey, Lance. Ooh, that's a nice looking chart there. Yeah, got plenty of volume, a little high priced, but that's okay. My theory with higher priced stocks, I recently, and I don't want to bang on other really great traders, so I'm not even going to mention who it was, but I recently watched a webinar from another really great trader. I agree with probably 99%, and it's another woman, which is rare in this business, and I agree with 99% of what she said. But this particular thing that she said, I don't necessarily agree with, to a point. I don't think you have to necessarily not buy a stock that's over $100 because, say, you only have $100,000 portfolio to work with. I think that you buy in percentages. Certainly, if it's to the point where you're looking at, Google and all you can buy is 2 shares, maybe that's a little silly because it's hard to peel out of that. And I do like to peel out. But if you can buy, I don't need to buy 100 or 200 or 300 shares. I'm happy buying 10 shares. I can peel out of 10 shares. I can peel out of 20 shares if I have to. And for me, the point is percentages. So if a stock still has a strong percentage trajectory where I could still get 10% and risk less than 5%, I don't care if it's a $150 stock or a $20 stock. I'm happy to do that. Obviously, if your account is only $10,000, it's hard to do that. It's hard to do it if you're only going to buy 1 or 2 shares. So to an extent, I agree with her, but I felt that listening to her advice there was a little extreme. I don't think it's that necessary. I think as long as you can buy 10 shares or more, you're good, because that's enough to peel out of. And with Interactive Brokers, the commissions are so low. If you're with a brokerage where it's not worth it to buy 10 shares because you have to pay $7 or $9 for a trade, then yeah, obviously that doesn't make sense. But there's so many good brokerages now that are super cheap. If you buy 10 shares, you're only going to pay $1. And Interactive Brokers is one of them. Lightspeed, I think it's called, is another one. There's another one I saw recently. I'll have to look up what that is. I can't remember the name. But there are a few out there that commissions are really, really low, and it makes it easy to buy, to have a smaller account and buy a smaller number of shares. So going back to this BMRN, BioMarin Pharmaceuticals. So lots of you folks know I don't do a lot of pharmaceutical drug stocks. I tend to stay away from drugs. Every once in a while, I'll give it a shot when I see other folks doing really well, and inevitably, I don't do that well on them. They just they're just a little too volatile for me. But this one being, you know, $120 stock. Celgene was another one that I've done that I think it's, you know, it's a higher price stock. Let's see what that looks like today. And this looks like it might be making a double bottom in here, so this would be worth watching on putting in a left-right combo today. Has this definite, you know, strong resistance to get through up here, so I don't think you have a very good trajectory yet. But this tends to be a little less volatile, right? I have this percentage in here scaling that tells me what the percentage is from one grid to the other. So it's only 1.5%. So that's not as volatile as some of the other biotech stocks. This one gives you 5%. As you can see here, 5% between each grid line here. So that's a pretty decent mover. But you also don't need to be too worried if it loses one grid line, you're only looking at 5%. So that's, I like to see that. 5% is a good number to have between grid lines. It's not too volatile to get you in too much trouble. You can generally still find some good risk reward here, moving up to this. In fact, you can see this by this grid lines. Because we know this is 5%, you can easily know that the 34 EMA, for example, if you were to put your stop below that grid line, you would have, or below that 34 EMA, within that grid line, it would only be about 5%. Let's see, it's 118.97 from 122.80. So that's $4 on $122 stock. So that's less than 4%. But your trajectory higher, you can see that your target up here is this swing high in the 133s. And that is close to 10% to the upside that it has in potential. And you have this bullish engulfing candle, left-right combo after multiple dojis in here. Even a cradle pattern, because you have this flush candle, red candle in here, all of these dojis, and now today's larger green bullish candle going to the upside, creating this cradle. And it's also a J hookish pattern, probably looks more like a J hook on the weekly chart. Let's take a look at that. Yeah, see, that is a beautiful looking J hook pattern forming in there. And you have these nice candles forming in there as well, targeting this swing high as a first target. But looking at this weekly chart, I would think that on a longer term, you could probably hold this and get even more out of it. Okay, back to the daily. Okay, still going through all of these chart requests here. ESPR. I know I mentioned that in the room earlier. That was looking good, starting to break out of this little resistance line here. Obviously, it has this swing high here, 118.95. That's a $10 move, fairly decent move that you have to the top side there. 10% per grid line. So this is a bit more of a volatile stock. But you do have this pop off the ADMA at 102.80. That's more than I would like for a stock. If you really, really like this, you could use this trend line or, you know, these swing highs here as your stop. 109. That's even above that. So it hasn't even gotten through that top line yet. It's a tough one to trade because, right, it's hard to find that risk and reward in there. It's a bullish looking chart, but risk and reward don't seem to be as conducive as the previous chart, BMRN. KSS. Oh, that's a nice looking chart. Really, really nice looking chart here. Really like this pattern in here, this sort of swing pattern, or, you know, you could kind of call it a scoop if you could say that sort of going straight across, although it popped up here and then came back down. You have a double bottom here as well. On the weekly chart, I bet that looks nice. Oops. I know you don't see it so much on the weekly chart. On the weekly chart, it just looks like a J-hook pattern bouncing, setting up and bouncing off of the 8-week EMA. I do use the same moving averages on every trend line. Love how rounded this is here with these dojis at the bottom through the 8 EMA. I'd say this is a buy here. stop is only you could put it below the ADMA, you could put it below today's low and still have very easy risk reward. First target is this top line above 579. Not a huge move to the upside, but I suspect that you'd be getting in early and can look for that breakout at that top there. If it doesn't get the breakout, if it rejects the breakout, then you could still sell it with a profit and get out and wait. So that's a great one. Oh, Raj's idea. This was Raj's idea. This KSS. Raj likes to kiss. I'm sorry. I'm sure he likes to kiss his little baby girl who's so precious, right? Coles indeed. I think he bought it. Did you buy it this morning? Is that what you said? SPLK, I see you asking about SPLK and should you take some off here? Certainly would make some sense, right? I don't know what your gains are or where you got in, but you have, 4 candles going to the upside, pulling away from the ADMA. I think you can target this swing high, but if, to peel out, if you've got a decent profit in here right now, it certainly would make sense to take off a little bit, a third or a quarter or, whatever feels good. Or I don't know what your position is. I don't know where you got in, etc. So hard for me to make that comment without knowing that. But if you had gotten in back here when it popped through these MAs and you've been holding it through here, you likely have a 10% gain in there. So yeah, take some off, right? Take some of those profits, and that way you can give it room to run after that, because it will likely need to pull back or at least let the ADMA catch back up before it gets higher at some point. Sometimes they don't. Sometimes they just keep going, which is why, you want to take some off and let the rest run. CRM, Salesforce.com, nice looking candles in here. You have yesterday's left-right combo. Is that a left-right combo or is that a trader's best friend? Let's see. Closed at 67.38, opened at 67.38. So that's a left-right combo yesterday. And you certainly have confirmation of that today. Certainly looks like it's going to go higher in this horizontal line here. I'd say that you're looking at some resistance there. You can see where this volume at price is. So that resistance are those little spikes there on the candles. But I would say that, I like to say that you have a cushion of resistance or a mattress of resistance and support, because there are quite often like an area of support. So that's your mattress of resistance in this case. I think you also have a mattress of support on this one. Definitely been trading in a range, as you can see there, right? And I'd say, you kind of have a few different levels of mattress of support here. That is the bottom of that volume at price bars. These bars on the left here, for those of you who don't know, those are volume at price bars. And basically that tells us what kind of volume there is at a given price point. So lots of buyers and sellers come in between 66.82 and 68.70 because you have a lot of volume in there. So you can expect buyers and sellers to come in there. And when you see a space between bars like you do here, there's not a lot of volume at price there. So things will tend to whoosh up and down through them pretty quickly. That's also one of the things we talk about when we talk about having enough volume to get out of a position. The reason that we want to have enough volume is so that we don't, when we're looking to get out of something, if it's on the way down, you want to get out. You don't want to lose a lot of ground as it's slipping. They call it slippage, as it's slipping down through a low volume area. So that's one of the reasons we look for enough volume, and it's also a reason to consider this volume at price. It also tends to do it to the upside, so that's a nice thing. It can go move up through a volume pocket pretty quickly as well. So you have these matrices of resistance here. This is certainly some bullish candles. Clearly it's been going in sideways trajectory here for some time. I think that I think that this can be bought, but I'd say that it has a lot of churning that it needs to sort of get out of, right? If you got in here, I mean, I like the way it's created this base here and that it's been consolidating in here. It looks like it will want to go higher. It did fill this gap after gapping up. No reason why it shouldn't at least target that swing high of $71. That's only $3 from where it is now. So really you'd be buying for that breakout of that line. We also could draw, see this on here. So that's definite, it's popping up against that same line of resistance when we draw this triangle. And you have one on the bottom here. You can see these, right? You can see these when you look at charts, and you can see that they make these patterns in here, and they create these triangles. So certainly a bullish chart, one to watch. Not sure if I would want to get in right here, but definitely a good looking chart. If you're in it, you stay in it here. CLDX, ooh, nice. Clearly had charted this a couple days ago, broke out yesterday. Not sure when I talked about it, but clearly I was looking at it. Broke out yesterday and is continuing today. A little hard to buy today. Yesterday was the buy. If you're in it, you can stay in it. If you bought it yesterday and you are currently in a 7 or 8 or 9% gain, you could certainly take a small piece off, like a 1/4%. I usually like to wait till 10%. But so I'm not going to, the way this market's been choppy, 7, 8% is a pretty good gain, and would make sense to peel a small amount of profits off there. VRTX is the last one I've got on this list for Lance, and then we'll move on to some other folks. Breaking out of this top line here, obviously, created this cup and handle. A little bit difficult to buy here because it's getting a little extended from the ADMA. But if you are already in it, I'd say that this is definitely a nice breakout here. You could definitely stay in. Upward trajectory overall ever since last, looks like April, last about a year that it's been going up. And let's see, we can zoom back in a little bit. Definitely a nice looking chart. You can see these waves in here, and they're creating these new waves. Again, kind of tough to enter here. $6 from the, it's not, it's 5%, right? It's not, it's a little less than 5%, but you only have 3% between grids. So you're not going to get a huge move to the upside. Looking at a 5% risk. So I don't think this is the entry here. This was definitely an entry on Tuesday after it had put in this doji spinning top type candle below the ADMA and then gapped up through it. That was a trader's best friend right there. That could have been bought first thing in the day, and you'd be riding it to here. And at that point, I'd be saying, take some off. So I don't know if you're in it, or if you're just looking at it at this point. But there it is. Okay, Raj, ESRX. Did we just do that one or no? No, we didn't already do this. Nice looking chart, Raj. Like this trend line I'm seeing here. Clear upward trajectory trend line, right? I think we could even, you don't necessarily need to use that bottom. You can see this here is also definitely putting in a trend line here to the upside. Some volatility in here, certainly. Looks like it moves not very much, though, 1.5% between grid lines. So you're not going to get a very big move to this upside swing. High is at 89.59. So you're only talking about $3, which is only 3-4% to the upside, unless it breaks out of that. But the candles are nice. You have all these dojis in here. Clearly, this was a bottoming Morningstar doji. It does have the gap on both sides. And then you have these dojis followed by today's bullish engulfing, creating a left-right combo. It's engulfing several days worth of candles. Weekly chart looks nice. But again, targeting just this high is not a very big move to the upside. So if you think that it can go beyond that and you want to buy it before it does that breakout, certainly worth trying on a weekly basis, I think, but it would require some time since it makes much smaller moves. See, this is 5% on this weekly chart between grids. So you're looking at about, 5%, a little bit less than 5% to the upside. But your risk here, if you use that bottom line, is very low. So it could be tried, but I would think that it would need some patience. VSI is the other one. Let's go ahead and start it on the weekly since we're already here. Ooh, nice weekly. I like this weekly. You clearly have this base setting in here, although it was trying to head down. But I would say that there's definitely a base here, right there. And then what you have is like one of these cushions. One of these mattresses of support, sort of a W pattern here. So like a double bottom pattern in here through the ADMA, continue to the upside. And this is the weekly chart. So let's take a look at the daily. Daily looks nice. So, I mean, you can target this swing high here. You have 7% between grid lines. So this 31.84 from 26 is a really nice move, right? That's over $5 in a $26 stock. It's close to 20%. Whereas your risk, if you go below the ADMA, is $1 on a $26 stock. So that's very low, 3-4% risk. You use the low of the day even, which would make sense because yesterday's low is there as well. So you can see that was once resistance. Let's do this here. I often talk about resistance becoming support, support becoming resistance, and you can see that there's one of those cushions up there as well, one of those mattresses of what was once resistance and is now support, and you can see the cushion is something like that, right? So it tested that cushion. I'm not doing a good job drawing this here. There we go. Let's try that and that. There we go. Tested this cushion here and has popped back through. This is a buy for me. I would say that you have really nice risk reward, really good looking candles, and a really nice pattern and a nice move to that swing high. Taking a look at the hourly, yeah, look at that. It's also sort of J-hooking in there after coming up from this. Definitely a nice looking chart, Raj. I think that you could definitely do that. GoPro is a fad, I tell you, just a fad. I know you think that. Nugget for Mr. Coach. This is the hourly chart, so I guess it's making a move. I don't know if you really wanted me to chart this. I know gold has been really rough, and you've been continuing to hold it as a core position. This being a 3X is a big mover. Grid lines are 30% here, so if we pull out a bit, we'll get a smaller grid line. No, it doesn't. It doesn't. Those are your huge grid lines in here. So volatile because it's a 3X gold stock, worth trading when I think you really, really know that gold is going in the right direction. For you as a sometimes day trader, I know that you like to day trade these things. You certainly had this doji down here with this move higher. If you had bought it in here, you could be riding this a little bit for a small move. You have resistance with these other moving averages on the hourly chart, but not something I would get into at this point. I think it has a lot of time. VHC. Okay, kind of that's the hourly chart. Let's take a look at the daily here. Daily's nice. So bounced right off of this. I don't know. Oh, I guess it's a volume at price bar. Let's move to over here. I think I have better. Yeah, better. So it still has that volume of price actually in here because that makes sense, right? I don't know why I had those giant volume of price bars. I must have a weird setting on that other chart. This is an RBB, or one of Rick Sadler's rounded bottom breakouts. You can see the ADMA had popped through the other moving averages, and the 200 is above. So targeting that 200 is 789. On the daily chart, you are right on the T line, actually just a bit above, so very low risk. You could certainly take this with a target of that 200-day moving average. Glue. You're not in the. Hold on, You are not on the BT.TV site. Raj. So I see that you said that you weren't on the call. I think that's what you mean. Yeah, Glue's still looking great, right? I mean, it bounced right off that ADMA. It came back and tested it after yesterday's huge move, and it got a little too ahead of itself, got a little extended. Excuse me. So it came down and tested that ADMA, pierced through it just slightly, and then moved back up to above the breakout level. So this is really nice here. Certainly, it's a red candle today, but it's, I think, easy risk reward here at this point. You could definitely buy it. You have a ton of support below. 525 is your ADMA from 540. So that is a decent risk reward there. If you use the bottom of today's candle, 522, if you go just below that, looking at about a 20-cent stop and a $5 stock. So that's less than 5%. It's only about 4%. Targets, looking at this on a longer term, let's see what the weekly looks like. Yeah, so look at where your target is. Weekly's gorgeous, first of all. Look at this. Beautiful, beautiful. Lots of dojis in here, rounding off the 8-week moving average, exponential moving average, still above the breakout level, and targeting this swing high around 760. Nice risk reward there. I think you could certainly get into that. Let's see. IBM is busting. I have a story about that, but I'm not going to talk about it on the show. But I will talk to you guys about IBM, and that's really interesting, right? Because it has this. Did it fill this gap yet? It has this gap to fill. It has this huge pocket of volume because there was the gap and just little wicks on the top and bottom. So even to the bottom of the volume pocket, you're looking at 181, which is a $10 move. That's still not a huge move in a $171 stock. But we are looking at about 5% per grid. You could still easily see it go higher if it's doing well. Definitely putting in this sort of if this had gapped into that gap, this would be an island bottom, but it didn't. Certainly, I would call this a fry pan pattern, a fry pan breakout. Bullish pattern there. Also kind of looks like, when you zoom out a little bit, looks like a head and shoulders, right? You can see there's a head and then a left shoulder and a right shoulder on that bottom in there. Oh, this is the weekly chart. So let's take a look at the daily. Oh yeah, look at that. So this daily is, I would say, definitely this fry pan bottom breakout. And you should notice the volume at price bars are still there. And it's tapping at that 200-day SMA. So that's where it's finding resistance right now. Looks like it's pulling back from there. So, you keep an eye on this. It is above that volume at price bar. I still think it could go to like 184 if it gets through that 200-day moving average. Hi, Max is turn. Oh, I switched back to myself. I don't know that I meant to do that, but hi. What happened to my, whoa, I lost my chart for some reason. It popped back. Whoa. That is really weird. Let me see what happened here. I seem to have stopped sharing the screen share. So let me get that back on. Okay, I don't know what I did there, but let's go. Let's go back to, there we go. There's the IBM again. Okay, so what else did you guys have here? I see somebody saying Hymax is turning. There's a lot of work to do before I would consider that a perhaps it's putting in a double bottom there. A little bit, trying to put in a base. Certainly not very excited about Hymax. Still in a downward trajectory. Has a lot of work to do before I really give it the time of day. SUNE, yes, that's very nice. And break out of this top line here nicely. If you bought this yesterday, you're looking really pretty. Feasibly, you could still buy it today. Risk reward is still pretty easy. Solar doing well as oil comes up, and this being a cheaper form of alternative energy. Dang and Baba, is the show over? No, the show's not over. Yeah, dang, nice, dang. Okay. Speaking to the group and your what? Okay, I don't think my microphone is muted. I think you're okay. Baba still has some work to do. It has a base, but it definitely has some work to do. Not sure if the technical stuff has been working well. I think it must have been because Gigi answered a question. So I think that must have been working well. I see Glue, you're putting in a buy stop at 556 with the 557 limit. Is that a breakout of that? What is that a breakout of? Not really sure why those are your numbers, but I'm sure you'll explain it to me. Personally, I think you can buy this here. I wouldn't let it get much higher before you get in. If you like this chart, I think it's the risk reward is there right now. I would say get into it now. Okay, so we had a few technical difficulties. I'm just gonna come on back to here. Hi, a few technical difficulties we had, but I think for the most part, everything was okay. I'm gonna go ahead and call that today's show. And I thank you all for stopping by, and the video will be ready, and it takes about 20 minutes for that to upload and be available, and then I'll put it on my site and I'll send it out to Twitter and to those of you on my email list. Thanks again for BTFD TV's venue, for providing this wonderful venue so that we can do these wonderful broadcasts. And again, get out and enjoy your day. And I hope you're having some good trading going on. Good trading to all of you. Once again, if you'd like to contact me, you can write me at thetradingwife@gmail.com. Follow me on Twitter at thetradingwife, all one word. And my website is www.thetradingwife.net. Happy to answer any questions at any time. So feel free, please, to contact me. Oh, we're going to have a couple of fun things happening in the next couple of weeks. Next week, I'm going to have Ryan, Share Planner. If you don't know who he is, he's another wonderful trader. His site is shareplanner.com, I'm pretty sure. But Ryan Mallory, I used to work with him on his site for some time, met some of my members there actually, and he's a wonderful trader and has a lot of insight, and he's going to be coming on the show next week to talk to us about what he sees in the markets and in charts and just about trading in general. And then 2 weeks after that, on May 14th, I'm going to have Danny Spider Crusher. So if you follow him on Twitter, he's at Spider Crusher. That's Spider as in spy with a Y, SPYDER Crusher on Twitter, and at Share Planner on Twitter for Ryan. And we're going to do some interviews and some stock and charting discussion. Danny is the Share Crusher is the person who came up with the idea for the market timer that, as most of you who have followed me for some time know, that I use what I call my market timer. I used to use his market timer because he created this really cool software program, but he kind of went underground for a while, so I had to develop my own way of determining the market timer because I found that to be a really great, reliable way to help keep the odds in my favor, basically trading with the overall trend of the market, looking at that 80-20 rule. When the overall market is up, 80% of stocks are up and 20% are down, and vice versa. So I like to be on the 80 side of the 80-20 rule to keep the odds in my favor. Again, I picked that up from Danny Spider Crusher quite a few years ago now, like, I don't know, 6-7 years ago, I think it's been. So he's going to come on the show as well. So that's going to be a lot of fun. So look forward to seeing you guys next week. Have a great day. Take care. Happy trading. Bye-bye.